We're going to do some charting on some stocks that were requested from our Discord. We're going to be looking at Apple, Caterpillar, CCL, and a handful of others here. If you want to request a stock for fundamental or technical analysis in the future, hit the link in the description to join our Discord. We have a free option, and then we have just a $5 tier for the video tiers. And it also gives you access to the PDFs of all our teaching lessons we're going to do over the years and some other special channel features we have on there as well. Let's get into it. So in my opinion, we're starting with Apple here. It's easiest to learn whenever you are on a line chart instead of candles when you're a beginner. I like to go about a year out and then start my assessment of the whole stock. So we're a year from today's date. So what you're looking for are highs and lows. We're going to start at this point here. We come up, we form a high. We come down, we form a low. We came up, formed a high. That is a higher high than that one. And we came down and formed a new low, but that low is a higher low than this one. So we had a higher high and a higher low. That's what makes an uptrend as you keep going. So continuing from there, we just keep looking for higher highs and higher lows. So these little bitty ridges here you're seeing, you can just kind of ignore those, and with experience you will learn what you can ignore and what you can't. It just, trust me, it just takes practice and experience. These little bitty ones though, definitely ignore them and just treat them as if they were a smooth line. So continuing from there, you could count this all as one trend, and you could count this as a new trend here. So a new higher high, higher low. Then it spiked out here, a higher high and a higher low. So even though you had a dip, the uptrend is still intact. Now I do want to point out that we formed a new high here, higher than that. If this low had, instead of stopping here, had kept going down and it then went lower than that previous low, then the uptrend is no longer intact. You had a higher high, but then you had a lower low. But anyway, it did not. It continued the uptrend, higher high, higher low, higher high, and then we had a high. I guess if you want to count this as a low, it is technically higher, but then we could not continue to form a new high. So the uptrend is no longer intact at this point. And then moving into, so a downtrend, it's literally just the opposite. Don't try to overcomplicate it in your head. Instead of looking for higher highs and higher lows, you're now looking for lower highs and lower lows. So we start here. It comes down, forms a new low, and forms a new high. But that's a lower high. And it comes down, forms a new low, but it's a lower low. Even though barely, it's still a lower low. After that, it kind of bounces around, doesn't really know what kind of trend it wants to be. It's having these short-term bursts between different trends. You do have a downtrend there for a couple weeks. And then kind of an uptrend there for a couple weeks. So this is what we call trading sideways. We don't really establish a trend one way or the other. But skipping ahead to answer your actual answer, it's currently in a downtrend. We have a high here, a lower low, a lower high, a lower low, a lower high. So do not buy Apple right this moment. We want to see it turn around and become an uptrend. Okay, we had looked at BABA, and when I had zoomed out to the 2-year, we saw an uptrend, obviously, and then it was going very strong. It was a power stock above all the moving averages for the most part. Occasionally, it would dip down below the 25 here, and then we had this downtrend here for certain downtrend, and then this huge gap. Now, let's talk about gaps for a minute. This huge gap happened. I believe this was around the time that Jack Ma there, the head of BABA, disappeared for his comments about the Chinese government. But regardless of why a gap happens, let's talk about what a gap is, right? A gap, by definition, has to occur in after hours trading, right? Because on a candlestick, let's take this one for example, the top of the wick and the bottom of the wick are the range that the stock was trading at some point throughout the day during normal trading hours. And then the full body, the thicker part of a candle, is called the full body. And the line at the top and the bottom is showing you an open and a close. If it's a green candlestick, then it opened at the bottom of the full body and closed at the top of the full body. If it's a red candle, then the price opened the trading day at the top of this red candle and closed at the bottom of the red candle. And what's nice, guys, if you're on TradingView, I'm going to leave my finger pointing to this candle here, and if you look at the top of the screen in red, you'll see O22824 HLC. Those are the prices of the open and close of the candle, and then the high and the low for the day. So if you ever are curious and want to quickly figure what that is, just highlight the candle you want and it populates it for you up there at the top. So anyway, a gap happens. You have this huge space here with nothing in it. So because the wicks are showing you the range of the price throughout the trading day, any movement that happens without a wick being involved or a candle at all had to happen in pre and post hours. Okay. Now, what's the significance of a gap? Well, when a gap happens, more often than not, again, nothing in charting or trading is a guarantee, but more often than not, when you have a gap, it's likely that you're going to fill that space very, very soon, especially if you haven't filled it anytime recently. So this huge gap, nothing had traded in that range since August of the previous year, right? So it's more than likely that the stock is going to come up soon and fill some of this price range here, and it did. Just 2 days later, it came up. It couldn't stay there for very long, but it came up and filled the gap. So that's the significance of a gap. If you see one, it's likely that soon the price will move up into that area or down into that area, vice versa if it's a gap going up, at least in the short term, unless it has previously happened fairly recently. So we had this big gap down when he disappeared. They traded sideways, went up a bit, traded sideways, and now they're in this downtrend here. So we have an area of support/resistance here, and we have an area of support/resistance here. Now, I was drawing this over the weekend, so this candle didn't exist yet. This is today's candle. And what I was telling him was that it's very hard to gauge BABA right now. It's currently trading under all of the major moving averages. That's not great, guys, because that means that most likely one or all, 1 to 4 of these moving averages is going to become resistance for the stock at some point. And then you also have this prior support resistance that had held back here and then held again here. That could potentially come up and become resistance for BABA again. So this is one of those situations where you don't really know for sure what's going to happen. You kind of have to just gauge things by the likelihood. That's how I like to approach it, is looking at this as a whole. What do I think is most likely to happen? Option A, plan B, plan C. Like what's most likely, second most likely, third most likely type of thing. I think the most likely thing for BABA at this point is that it hits around this area that it's hitting at right now. You see it formed this support back here, back in January, and now it's kind of forming it again. This support is holding. Most likely, in my opinion, for BABA is it's going to bounce between this support and resistance at least for the next couple months. You want my prediction? To me, that's the most likely thing that's going to happen to BABA. So we also did a long lesson today on 50/50s and in particular CCL. If you guys want to pull up CCL's chart, this is about 2 years out. And we see that even prior to COVID, this point up here was April, February, March-ish of 2018. It was already in a very heavy downtrend. And then COVID hit it with a hammer and knocked it down, right? So the price fell from a top of somewhere around here down to at its lowest point at the bottom of this pink arrow right here. So what a 50/50 is when a major fall happens like this, or vice versa, a major meteoric rise. You take the point of that it was at the highest and the point that it was at the lowest. And you're going to do some math. You're going to take the highest point, so around $52. You're going to subtract the lowest point, which is around $8. Then you divide that by 2 to get basically the average midpoint between the 2 points. Then you're going to add the low number, meaning the midpoint between 8 and 52 is $30-ish. All right, that's $22 from 8 to 30 and $22 from 30 to 52. So this is known as a 50-50 line. Now, what's the significance of that? Well, like a lot of things in charting, this is one of those self-fulfilling prophecies. I will talk in the future about how charting in and of itself actually is kind of a self-fulfilling prophecy, particularly certain indicators like moving averages and stuff. The more people that believe in this stuff and that it has significance, the more likely it is to be significant, because the more likely that you are to base your decisions off of it. If you believe that this purple moving average here, this 25, if you believe that that has significance and 100 other people believe that it has significance, then it's going to have significance. If nobody believes that it's going to do anything, have any type of bearing on the stock, then guess what? It's not going to have any type of bearing. This is all like, it's kind of interesting, but it's all kind of like a hive mind type of thing. Now, a 50-50 line in particular is when you have that big drop, a lot of people in their mind, and historically a lot of the bigger funds, they know that history has shown, for whatever reason, back in the day, when a big drop would happen, people would try to hold out until they recovered half of that loss, or on the flip side, they'd play with half of the gain. They'd take half out, scalp it, and then keep the other half to play with. But they would know that historically, the price pretty soon is likely to come up to around this 50-50 point. So they want to hold, get half of their money back that they lost, and then they exit. Well, the longer over the years that has become a thing that frequently happens, now the more likely it is to happen, like we were just talking about. So it has become this thing over the years, over the decades, of an actual phenomenon, and the 50-50 is a common, the common name for it. Now you're going to see this with a lot of COVID stocks. Not every COVID stock, because again, it's not going to happen with every stock, and not all of them responded. We had some stocks like Amazon that shot up on COVID, and a handful of other ones, some of the tech stocks and stuff. But if you're looking at a stock that had a huge drop in COVID and has yet to get to your 50-50 line, if you want to do the math I showed you how to do and draw that, then just keep that in the back of your mind, that could potentially become resistance at some point for your stock. We're seeing it happen right now with H&R Block as well, a stock I've been following pretty heavily. So look what happened way in the future. So let's say we forget that ever happened and I don't have this 50-50 line on here. It came up a year later, went right to that point 2 days in a row, and wouldn't you know it, that's exactly as high as it could go. It hit resistance at that 50-50 line that we could have drawn all the way back here a year ago, guys. That's what I was talking about in a previous lesson. When this stuff clicks for you, when you make this line here a year ago, and you fast forward a year and you see this happen, you're going to be like, dang, I am getting good at this. This is working for me. I know what I'm doing here. And again, not everything is guaranteed to happen, but just keep that in your mind, that there is more chance than not that becomes a resistance for you. So that's what's going on with CCL right now. Now, the good news is if you're long CCL, the bad news is it's absolutely dog crap from a fundamental aspect. I personally don't recommend you be involved with CCL whatsoever. They're loaded on debt and selling shares like crazy, and that's going to be who knows how many years before they're back to business. And even, as we said, even before COVID, look, it was not looking good for them. However, I digress. From a technical aspect, they are currently still above all the moving averages. Friday, you had this heavy rejection of lower prices with this long wick there. And you have these areas that are potentially supports for you that have formed over the last few months. Okay? So you're gonna, one or two things are gonna happen. I would say most likely it kind of plays between this and the 50-50, and then it's gonna break the 50-50. But what's gonna do that is probably news. You're gonna need enough good news to come in to bring in enough volume. This orange line here is our average volume tracker. You want above average volume buyers, and that will help you bust through that resistance. And then you're home free for a little while. I mean, you don't have much resistance area and support areas until you get around there, around the 40 something mark. So if it can do that, then you're good for another 33%. But again, you got to keep in mind, if you're a full trader, if you're not just looking at this from a technical analysis standpoint, this is not a great stock to be holding on to from a like purely fundamental analysis as well. So if that weighs into your decision, just keep that in mind. Looking at AMCX now, and I always like to start a couple years out, just kind of getting a rough idea of what the stock's doing. So we had a downtrend that started back in April of 2019, steadily went down, down, down. Now it's steadily going up. This is a nice, healthy uptrend, guys. This is what you want in an uptrend. I mean, it's not perfect, but you want some consolidation like this. This is healthy. Because why? Because this forms your support. I can now predict that we've got a support somewhere around that point, and I can drag that out into the future to help me months from now when I'm trying to judge the stock here. We formed a nice support area there for a long time. That's why you want consolidation. You don't want something like a Palantir or something that shoots up, or a Tesla or whatever, that shoots straight up. Because guess what? There's no substance there. There's no consolidation there. There's not many people who bought and sold at that area that are still holding, right? It was a straight rise and a straight drop. Guess what's going to happen more than most likely is it's going to straight drop too. It's not going to come down and form a new resistance that it had previous, or form a new support that it had previously formed. Okay. So that's why you want a healthy step by step like that, a healthy uptrend. Okay. So anyway, specifically on AMCX, they had this spike. What happened around this point, guys? Let's think for a second here. In January, the end of January, what happened in the world of stocks? The GameStop, AMC, BB, all that craziness, right? This was a bunch of morons who didn't know that AMCX is the AMC television channel conglomerate and not the AMC theaters. That's most likely why you had this big boom and then sudden drop. Okay, so let's just kind of ignore that. This is one of those rare cases where we have to actually just ignore something for the sheer fact of an X factor like that. Let's pretend that this was just a straight line and that there weren't idiots involved in this. This is, so the reason we got this big breakout here is because of earnings. They absolutely crushed earnings. Look at this, 318% surprise on their earnings. So that gave them plenty of jet fuel to bust out. And now this is a healthy consolidation. So if you like this stock from a PE perspective, I bet you they're still trading at a good PE. Look at that. They're still at a 14.5. Guys, this is a good stock. I've been following them for a while. Unfortunately, I had not bought into them. I was looking at them around this range, and I was gauging juggling a handful of stocks, and I decided not to play their earnings, and obviously now I'm regretting it. But you know what? That happens. It could just as easily on other stocks shoot down that far on you. So I don't have any FOMO about it. But I will say, look, this is forming a nice, like this could be resistance in the short term. It could come back down and ride this 25. Look at this 25, guys. This 25 from about this point in November, this stock has respected this 25 pretty healthily. So more likely than not, it's going to come down, and around this point in mid-March, so 2 weeks from now, it's probably going to be coming down a tiny bit in the 65-ish range, and it's going to be bouncing up off of that 25 SMA, and it'll have a decision to make. You've got this area that's forming of resistance here. How do I know this is resistance, guys? Well, you've got a peak here, and then you've got 1, 2, 3 more touches where it tried to break that and could not, and now it's kind of consolidating and probably coming down a tiny bit. So it's probably going to trade sideways for a while or come down very slightly. The 25 is likely to keep coming slowly up, and then it's going to form a wedge, like we talked about earlier. That would be my prediction of most likelihood. So then we could get another breakout to the positive or to the negative. So keep that in mind moving forward. If you like this stock from a fundamental perspective, I don't think it's a horrible time to buy right now. And if you have a lot of conviction, I'd say now is probably as good a time as any to buy it. All right, we're on Palantir now, and I'm zoomed in before showing you something on purpose. So Palantir is an IPO, and it's very difficult to chart IPOs. I personally don't like to invest in stocks whatsoever until they've been out for, I'd say, at least a year, even if not two, because you don't have a lot of data on them, both usually financially or chart wise, to really know the behavior of that stock. And you haven't had time to form many averages. And it's just, there's a lot of unknowns, and everything about success in the markets, both from a technical aspect and a fundamental aspect, is about, in my opinion, controlling the controllables, right? Eliminating as many unknowns as you can, making all these little adjustments and little tweaks towards accuracy, because this is all a statistics game. And for you to beat your peers, you've just got to try to eliminate as many X factors as you can. So that's why I don't like IPOs for trading personally. But we'll go over this because that's what you guys requested on Discord. So this is back in November, December of last year. And you notice that when it IPO'd, it was pretty flat, had a nice little run up, hit a point here that it just couldn't close past. So look, it never closed past this point for, that's 1, 2 week, 3 week, right? So what this is a very healthy resistance, very likely area of resistance. So when I do that, remember, I personally like to draw it out into the future so that I don't forget about it weeks and months later from now. And then it traded sideways within this range. So when a stock trades like this is known as range bound, okay? It's respecting roughly these two lines. Now, what happens with this? Well, this is a good, actually, I'm glad you guys brought Palantir up, because this is actually a decent example of the psychology of supports and resistances. So this would be our support in this current case, and this would be our resistance in this current case. I'd like to use the analogy of, think of them like sheets of plate glass, right? And you've got bears and bulls. The bulls are trying to push this up into the resistance and break this glass. And the bears are selling and trying to get, they're shorting the stock. They're trying to get pressure and bust through this support. So you got bulls pushing into resistance, bears trying to push it down into support, so on and so forth. The math says that the more times that this area gets hit, the more likely it is to eventually give way. And same for this down here. So the more touches you can get on these supports and resistances, at some point it's got to give. So I like the sheet glass analogy because every time you hit it, you're putting a little crack in it and it's starting to splinter out. Every time you hit it, you're weakening it a little bit. You're getting a little more cracks into it, and a little more, and a little more, and it's getting weaker and weaker. And eventually, it's going to give way. The question is always, how long can it hold? So if we zoom out, though, let's move into the future. So I wanted to show you, though, on a separate note, we had this support that formed here, and it held for a few months. So this was back in January, the last time that it was a factor, right? If we zoom out and into current time, the stock came up, hit a double top. We'll talk about that in a second, I guess. But then look, it's kind of holding at this support that I had earlier. And look, it resisted lower prices big time right here. That is a long, long wick. What does that mean, guys, when you see this candle right here? That means that it opened at this point, came all the way down here. So if we look at the numbers, It opened at 24.36. It got all the way down to $20.18 that day. And the bears said, "No way, dude. We think this stock is worth way more than 20 bucks." And they bought it up, and the support held. This is a good sign, at least in the short term, when you get that big of a rejection. Today it's just kind of, so here's a, gosh, there's so many lessons coming up to teach you guys at the same time. Let's cover this and then we'll do the double top, so let me forget. So this candle from today, it's currently, there's only 2 hours left for trading. It's going down, but it still hasn't really broken support necessarily. And also, it's on low volume. So guys, when you're trying to judge your moves and your candles, this is more pertinent to individual candles. You can put more confidence and stock into the candles that occur with higher than average. Again, this orange tracking line is my average volume. You can put more weight into the movements that happen with above average volume. So when you get a volume, this is the lowest volume bar that this stock has had in almost a month. So I don't put too much weight into what happens on this candle. I basically call this an indecisive candle. And essentially it is an indecisive candle just from the shape of it. So I still think this is more significant. If you ask me, the most likely thing that's going to happen is that it's going to continue to ride the support and trade sideways for a while like it did here for this range. So if you like Palantir and you're looking for an entry point, you could do worse. I will say that technically the stock is in a downtrend still. If we wanted to draw our downtrend line, we'd put it at the top of this close. And then we can't, when we draw our trend, we can't put the other point where a close would come above it. So we'll take the bottom of this one, I would say is probably the most accurate. We'll take the bottom of that close. So none of the candles were able to close above it. This does not break our trend, right? Why? Because it opened here, but closed down here. So it doesn't break the trend. So we can extend this out into the future, but we have to make sure that we don't lose. This is our main point here. So held again, it opened, but could not close above that point. Opened, could not close above it. So this downturn is legitimate. We got 1, 2, 3, that was almost 4, 4, 5 touches on this downtrend. So what are we forming here, guys? We're forming another wedge. We've got this area of support and we've got this downtrend. We saw this happen with Autozone recently when we were talking in Discord. And Autozone had that day where all of a sudden, boom, it shot up. So something is more than likely going to happen here very soon. Either it can be a big down candle or it could be a big up candle. If you wanted to place your bets, a man could get rich if he got lucky on a 50-50 guess on some puts or calls here as to which way this is going to go. Because history tells us that when something gets wedged like this, let's draw a wedge here. When a wedge happens, it's usually a big move that comes out of it, one way or the other. So this is going to be an interesting stock to watch for a while, I would think. Ignoring the wedge thing for a second here, let's go back to the double top. So when a stock goes up, hits a point, down, up, hits a point, down, that's a double top. That is a sign of price reversal. That's a sign that it's going to go down, at least for the short term, and that's exactly what it's doing. We came up, we hit a top, we came down, came up, hit the same top, that same resistance. So let's draw a resistance box there. Top of the close, extend it out. We got 1, 2 touch, 3 touch, 4, it almost got up there, and then it's just been downhill ever since. So this is probably a legitimate resistance line here for Palantir as well. So if you are buying Palantir, then just know that you might most likely get resistance at $38, $39. So if you wanted to buy it now, if you were confident, you could buy it, ride it up to 38 and sell, or at least trim your gains at that point. So we had, but yeah, that's a double top. So when you see that double top like that, and you see, you're watching this and it gets to this point again where it's come up, down, you really don't want to mess with that stock if you're bullish on it, if you're thinking that it's going to go up. I mean, The math says that this is going to be a downturn in the near future, and we see that that's what happened here as well. On the 2-year chart, Caterpillar has been trading sideways for a while, and then starting right after their big March dip with everyone else, they have been in an incredibly strong uptrend ever since. So this is over the last year with this uptrend that they started ever since COVID. You'll notice if you look at the 50 line, this is the 50 SMA, this yellow line that's moving. And an SMA tells you the average at each point here. It's telling you the average closing price of the last 50 closing prices before it. So when you see a stock come down and repeatedly touch, there's a touch there, when it's touching and bouncing back, touch, that tells me that it's more than likely, it's not guaranteed, but that's more than likely to hold as what we would call an area of support. The pink arrow line here is what I believe to be the most accurate trend line for the daily, and you can see it seems pretty accurate because we have 1, 2, 3, 4, 5, 6 touches on it. The interesting thing about gauging this stock is while it's been on an uptrend over the last 3, 4, 5 months, right now it's currently on the downswing of its uptrend here. See, we formed a higher high, higher low, higher high, and we're trying to find a new higher low. In these situations, it's really difficult to gauge what the stock is going to do from here. And our candlestick yesterday had strong volume, and this is kind of what we would call an indecisive candlestick. And I'll get into more classes on different candlesticks and what they can each potentially mean. But with this current action, I personally would be slightly hesitant to jump in. Doesn't mean you couldn't. If you really like the stock from a fundamental perspective, you could go ahead and pull the trigger or start to DCA into it, which is where you just say you want to eventually put 1,000 into it. You could go ahead and put like 250 in now and then wait and see what happens till you decide to put the rest in. But I gotta say, of all of the stocks on the market right now, a lot of them have been going way down over the last 2 weeks. This seems to be fairly resilient relative to the rest that I've been looking at. And also, as we mentioned, you have an area of support. When this comes down, this 50 SMA that it's been respecting is going to be around this area here most likely. They're going to come down and touch, and you've got a decent likelihood that that is going to hold and it's going to continue the uptrend. You would also have your trend line just under that as another area of support. So this is one of those interesting times where you as an individual trader have to make your own decisions about what to do here, because this could come down. You could decide to wait till this comes down, see if the 50 SMA holds as your support or if the trend line holds as your support, and then wait until it starts to bounce back before you buy. It's totally up to you. But at the same time, this could continue to kind of trade sideways for a little bit, therefore forming a new higher low and a new area of support, and then it could continue on. And if you were waiting for it to come down, you would have missed it the whole time. So this is where you could do that dollar cost averaging in at like 250 or 25%. Hey guys, so earlier we were talking about wedges, and I'm looking at Autozone here from 2021 January-ish to March-ish. And a wedge forms when you either have a downtrend in this case, or it could be an uptrend. But when that trend line, which has been showing strong, so in this case it was, I drew our point here, and then I drew our point here, right? And we saw a touch there, all these touches, but no closes over it. Touch, but didn't close over it. So this is my main point here, this is my main point here. So when I draw my trend line, I pick my two main points, my starting point, and then another point that seems strong, seems likely to be accurate, and I draw my line like that initially, and then I take it and I drag it out into the future, but keeping that same angle. I would not want to, let me pick this up here. I would not want to start here, and then when I drag it out into the future, go up or down. I gotta keep it exactly how I had it, and right through that previous day that I had chosen. So that's how you draw your trend lines, guys. And what I was saying to Nigel, I think it was earlier, notice how on my trend line, when I switch to the line, you can do this in candles too, but it's easier to visualize in line form. None of these are closing coming up over my trend line. So my trend is still accurate. Had I drawn this and picked this day instead and had these areas coming up over it and closing, but then going back down, that's not a very accurate trend. Yes, it is kind of showing that this is still a downtrend, but in reality, you can draw a much more accurate trend line by doing it the way that I did it there. And again, it's not necessarily that it's quote-unquote wrong to do it that way, but this is the most accurate way. And every little thing you do, we're just trying to increase our chances of being correct every little bit that we can get, because nothing is guaranteed. We just want to, it's all a statistics game. We're just trying to get the best odds we can get. But back on talking about wedges specifically, they happen when you have a strong downtrend, and as we said, we saw a lot of touches with this, so this is a accurate trend line. It held for a long time. We got all these touches here, and it's respecting the trend line. So this trend becomes our resistance. Resistance prevents a stock from going up. Support prevents a stock from going down. So this is our support. There was a support here that's been holding for a long term. It was actually even older than that. So this is a very strong area of support. And here we had formed a support, a shorter term support here. It had hit 1, 2, 3, 4, 5, 6. We'll kind of count that one. So 6 times. So it was legit, right? So we had this area of support and we had our trend line was a resistance. So it's tightening and tightening and tightening, and it's really squeezing the price action into a corner. Just like an animal that's backed into a corner, it's got to do something. So this is what happens. Eventually, the closer you get into that corner, the more likely that you're going to have a day where this right here happens. It can go either way. It can go up, it can go down. But the tighter you squeeze the price action, the more likely that traders like us, or most likely algorithms that are ran by these big hedge funds and other places, they make a decision based on math mostly, or their personal preferences on their algorithms that tells the computers start buying or start selling. And when that happens, it triggers other places' algorithms and they play off of it. So that's when you get these big moves one way or the other. So that's what a wedge is. And I also wanted to note, I drew this. I've been following Autozone and a lot of stocks for a while, and I did not draw this wedge, but I had drawn this area of resistance back around this date, right? And anytime I draw a support or resistance, let's pretend that this is today, right? And I'm looking at this chart. When I see this, where it's kind of trading sideways, this is what we call a very short-term consolidation. It's not moving big time. It's kind of finding a point here. That is a likelihood that this is going to become a support or resistance. It's not guaranteed, but it is common. So at this point, you get 3 or 4 days in a row like that, then you can say, okay, let's draw an area of resistance because that's possibly going to become one. And when you do that, don't just do it there. This is just my own personal tip from experience and my own way I like to do it. Don't just draw it there. Extend it out farther. So when I drew this back on this date, I extended out a couple weeks. I always do that. When I drew this one, I extended out a couple weeks so that I don't forget. So that if the price starts moving around, I don't forget, hey, you've got a resistance that might be coming up at this point. But I bring that up to show how gratifying it is that when we get a big outbreak like we did Friday, look, it came up and touched that resistance and stopped right there and came back down. That makes me feel good, right? That shows me that I know what I'm doing. This is all clicking in my head. And that's going to happen for you guys too. When you get experience with this and you start drawing your resistance and support lines and stuff, and you draw them out a couple weeks or a month or however far you want to do it, and it happened a couple months later or a couple weeks later, or something happens and your prediction comes true, that's really going to let you know that you're on the right track here. Things are really clicking for you in your head. You're really understanding this stuff. All right, hope that helped you guys. If you have any more questions, obviously hit us up in the Discord. And if you're not a member yet and you want to, there's a link in the description below.